The world is entering a phase where the difference between exponential growth and stagnation will be determined by the assets you choose to hold. Not theoretical bets, not speculative stories, but real, tangible assets positioned at the center of technological acceleration and global transformation. As we close in on the final stretch of 2025, the market is making one thing very clear. The winners will be those who own the backbone of the new economy. Everything else is noise. The first asset category is the physical infrastructure behind artificial intelligence. Most people still think of AI as software, but the real value is in the compute layer, the hardware, the data centers, the energy capacity, the specialized chips and accelerators that actually power intelligence at scale. The world is underestimating how much demand is coming. Every major model upgrade requires exponentially more compute. Every application from robotics and drug development to logistics and finance depends on access to high-performance processing. And yet, the supply chain for compute power remains constrained. We're talking about limited foundry capacity, restricted access to advanced nodes, and enormous pressure on energy grids. That scarcity creates opportunity. When you own exposure to compute infrastructure, you are not just benefiting from AI adoption, you are holding the irreplaceable foundation on which the entire industry rests. The second real asset to watch is large-scale clean energy and the storage systems paired with it. Energy has always been the heartbeat of economic growth, but the transition underway is unlike anything seen in the last century. Solar is scaling faster than any other technology in the world, and cost curves continue to bend downward. Battery storage is becoming a requirement, not an optional upgrade, as grids struggle with reliability, peak demand, and electrification. Add to this the growing energy needs of data centers and AI clusters, and you start to understand the magnitude of the opportunity. These are long-lived assets with predictable cash flows, supported by contracts, government incentives, and corporate demand. They are also inflation-resistant, technologically improving, and increasingly essential to national security. The world is realizing that clean energy is not simply an environmental choice, it is an economic and competitive necessity. Those who own the generation, storage, and transmission infrastructure will be holding assets that appreciate as the global power equation shifts. The third asset is precious metals, especially those with industrial utility, such as silver. While gold remains a timeless store of value, silver is becoming one of the most strategically important materials of the decade. It sits at the intersection of two powerful forces, industrial innovation and monetary protection. Solar panels require it. Electric vehicles require it. Technologies from sensors to semiconductors depend on it. And unlike many commodities, silver supply is tightening just as demand is accelerating. This creates a dynamic that markets often misprice until the move becomes unavoidable. When an asset is simultaneously a safe haven and a critical input for the world's fastest growing industries, it doesn't take much to ignite a major revaluation. Silver is not speculation. It is a reflection of physical scarcity colliding with technological necessity. These three real assets, compute infrastructure, renewable energy with storage, and industrial precious metals, share a common trait. They are foundational. They enable every major trend shaping the future. Without compute power, AI stalls. Without clean energy, industrial expansion slows and grids fail. Without metals like silver, the transition to electrification breaks. That is why these assets carry asymmetric potential. Their demand is not hypothetical, it is built into the architecture of the next decade. The message is simple: own what the world cannot function without. When you align your portfolio with structural demand, you are no longer reacting to markets, you are participating in the next wave of global transformation. And in this era, real assets are not just defensive positions. They are the engines of exponential opportunity. The market is shifting faster than most people can process, and those shifts are revealing a powerful truth. The biggest winners in 2025 will not come from speculation or hype cycles. They will come from owning assets positioned at the center of technological acceleration and global realignment. Every time we enter a period like this, a period when innovation collides with scarcity, the landscape produces asymmetric opportunities. And right now, three assets are emerging as the clearest paths to leadership in the next stage of economic growth. The first asset is the physical backbone of artificial intelligence. Many still view AI as code, algorithms, or software platforms. But the real value is in the infrastructure that makes intelligence possible: the compute, the specialized chips, the memory layers, the data centers, and the energy systems feeding them. Demand is exploding. Every new AI model is exponentially larger than the one before it. Every enterprise wants its own AI integration. Every sector, healthcare, manufacturing, finance, logistics, is racing toward automation and predictive capabilities. And all of that requires something simple but intensely scarce: processing power. What the market consistently underestimates is how constrained the supply side truly is. Advanced fabrication capacity is limited, Datus, enter Bill. Doubts require massive capital and years of planning, and energy requirements are rising at levels utilities never anticipated. Owning exposure to this physical layer is not just participating in the AI revolution, it is owning the essential infrastructure without which AI cannot exist. The second asset shaping the winners of 2025 is utility, scale renewable energy paired with high-capacity storage. Energy transitions in history are slow at first and then suddenly non-negotiable. We are already entering the second phase. Solar remains the fastest scaling energy technology on the planet. Battery storage is moving from optional to mandatory as grids struggle with reliability, spikes in demand, and unpredictable weather patterns. And behind everything sits the accelerating electricity needs of industry and computing. What makes this asset class so powerful is its combination of long-term contracts, predictable revenue, declining cost curves, and global policy support. Countries need more power, corporations need more power. AI needs dramatically more power, and the world cannot build enough clean, stable energy fast enough to keep up. This is not a trend, it is an infrastructure requirement. The investors who secure exposure to generation, storage, and transmission today will be the ones capturing the value created by this gap between demand and capacity. These are assets that compound, endure, and benefit directly from global electrification. The third asset that will create winners in 2025 is industrial precious metals, with silver standing at the center of the narrative. Silver has always had monetary value, but its industrial importance is becoming the dominant driver. It is embedded in solar panels, electric vehicles, sensors, batteries, advanced electronics, and energy-efficient technologies. As electrification accelerates, its role intensifies. Meanwhile, supply constraints are tightening. Mines are not expanding fast enough, discovery rates are slowing, and geopolitical risks continue to weigh on production. When an asset is simultaneously a safe haven and a critical industrial input, a structural imbalance forms, and eventually the market corrects it through rapid repricing. That is the setup unfolding now. Silver is transitioning from a traditional commodity to a strategic resource essential for the clean energy and high-tech economy. These three assets, AI infrastructure, large-scale renewable energy with storage, and industrial precious metals, share a powerful characteristic. They are not trends, they are necessities. They support the systems the world depends on: intelligence, electricity, and materials. They are scarce, in demand, and required for the next decade of global growth. When you align your portfolio with assets that the world cannot function without, you move from reacting to markets to anticipating them. You position yourself not just to participate in the future, but to lead it. If you want to build real wealth in 2025, you must shift your focus from what is popular to what is structurally essential. Trends rise and fall, but real assets tied to technological transformation, energy demand, and material scarcity tend to compound value in ways markets only recognize after the fact. The truth is simple. You do not build generational wealth by reacting to headlines. You build it by positioning yourself ahead of inevitable economic shifts. And right now, three real assets stand out as the most strategic opportunities for 2025. The first is the physical infrastructure powering artificial intelligence. While most investors obsess over AI applications, the true bottleneck and therefore the true opportunity lies in compute power. Every breakthrough in AI, from language models to robotics, requires exponentially more hardware, advanced chips, memory, servers, and the high-density data centers that house them. Add the massive energy footprints of these facilities, and you're looking at one of the most constrained supply chains in the world. Demand for compute is doubling faster than production capacity can catch up. Companies and governments are racing to secure access to hardware, power, and cooling. When you own exposure to compute infrastructure, you're not chasing you're holding the irreplaceable foundation on which all intelligence runs. These assets benefit from scarcity, long-term demand, and technological acceleration that is not slowing its compounding. The second real asset category is large-scale renewable energy paired with advanced storage systems. In previous economic cycles, energy was just another sector. In 2025, it's the lifeblood of every major industry shift. The rise of electrification, EVs, industrial automation, and AI has pushed global electricity demand into an entirely new trajectory. Solar remains the cheapest source of new energy in many regions, and battery storage is becoming critical for grid reliability. But here's what most investors miss. These are not speculative technologies, they are infrastructure. Once built, they generate long-term cash flows, backed by offtake agreements, utility contracts, and national energy goals. And costs continue to decline, making each new project more efficient than the last. Energy transitions historically create multi-decade investment opportunities, and we're in the steepest part of that curve. Investors who own the actual generation assets, storage facilities, and transmission networks are positioning themselves at the core of global economic growth. This is where stability meets innovation, a rare combination that strengthens portfolio resilience while compounding returns. The third real asset critical for building wealth in 2025 is industrial precious metals, especially silver. Unlike traditional safe havens that move on sentiment, silver sits at the intersection of two unstoppable forces, monetary demand and industrial necessity. It is one of the most conductive materials on Earth. Solar panels depend on it, electric vehicles require it, and advanced electronics cannot function without it. Every stage of the clean energy and digital economy pulls heavily on silver supply, yet the mining pipeline is not keeping up. Production has been strained for years, discoveries are dwindling, and geopolitical uncertainties add pressure. When supply tightens and industrial consumption keeps climbing, markets eventually reprice. And silver's dual identity, part commodity, part store of value, makes that repricing even more pronounced. Holding silver is not simply about hedging risk. It is about aligning with assets essential to the world's most rapid technological shifts. These three real assets, AI infrastructure, renewable energy with storage, and industrial precious metals, share one undeniable trait. They are non-negotiable inputs to the future economy. They are needed, they are scarce, and they benefit directly from long-term structural demand. While others focus on short-term volatility, the real opportunity lies in owning the assets the world cannot operate without. That is how wealth is built, by investing where necessity, innovation, and scarcity intersect. The market is entering a phase where the smartest capital is no longer chasing momentum, it's positioning itself in assets that sit at the center of structural, unavoidable global demand. When you follow short-term trends, you survive. But when you follow fundamental technological and economic shifts, you grow. And the truth is this: three real assets are quietly preparing for explosive moves in 2025, and the smart money is already rotating toward them. Not because they're hype, but because the world cannot move forward without them. The first asset category set to break out is the physical infrastructure behind artificial intelligence. Everyone talks about AI as if it's magic. They celebrate the apps, the chatbots, the automation, but the winners know better. They know that the real bottleneck, the real gold mine, is compute infrastructure. No model trains itself out of thin air. It requires advanced chips, high bandwidth memory, specialized servers, and data centers operating at power densities we've never seen before. Companies are pouring billions into expanding capacity because demand is running ahead of supply by an extraordinary margin. Every new AI capability multiplies hardware needs. And as enterprises adopt AI across every workflow from design to diagnostics to logistics, the demand for compute accelerates even further. When you invest in the physical layer, you are owning the one piece of the AI ecosystem that remains irreplaceable. The growth here is not theoretical, it's mathematical, and 2025 will make that clear to anyone who isn't paying attention today. The second asset positioned for a powerful breakout is utility scale renewable energy paired with grid storage. This is not a trend driven by narrative, it's driven by mathematics, economics, and hard physical limits. Electricity demand is spiking globally, not gradually, but exponentially, because data centers, electric vehicles, industrial electrification, and AI workloads consume massive amounts of power. At the same time, fossil infrastructure is aging, expensive, and politically constrained. So nations don't have a choice anymore. They must build clean, scalable, resilient energy systems. Solar installations continue to break global records. Battery storage is becoming essential for grid stability. And behind all of this lies long-term contracted cash flow, the kind of financial profile that remains attractive even in uncertain markets. The most overlooked truth about the energy transition is this: the world is now competing for electrons the same way it used to compete for oil. Whoever owns generation and storage capacity owns the economic engine of the next decade, and investors who grasp this early are stepping into assets that offer both stability and exponential upside. The third asset set to grow sharply in 2025 is industrial precious metals, especially silver. While gold responds to macro uncertainty, silver responds to something deeper: technological demand. It is one of the most conductive and reflective materials on the planet, which makes it indispensable to solar panels, electric vehicles, advanced electronics, power grids, satellites, and medical technologies. Every part of the clean energy and digital revolution requires silver, but here's the real catalyst: supply is constrained. Mines are not expanding quickly enough to meet surging industrial use. Grades are declining. Investment in new production has been inadequate for over a decade. So when industrial demand rises into a tightening supply environment, price adjustments can become rapid and dramatic. Silver is not just another commodity in this cycle, it has become a strategic resource. And assets that sit at the intersection of scarcity and accelerating demand always catch the smart money first. Across all three areas, AI, compute, renewable energy, and industrial metals, a single theme emerges. These assets are not optional. They are mandatory inputs to the next era of innovation and economic growth. That is why institutional capital is moving quietly but aggressively. That is why these assets are primed to outperform. And that is why anyone who understands the underlying technological trajectory sees 2025 not as a year of uncertainty, but as a year of opportunity if they position themselves where the world is going, not where the world has been.